What's up, investors? It's the Russian dude. Let's talk about this list of top 10 stocks that the Wall Street is recommending to buy and hold right now, because according to major analysts, it is extremely favorable conditions right now on the stock market, because, once again, only according to them, the soft landing has started. According to them, the soft landing, it means that the inflation right now started a little bit budging, the situation on the employment market is also getting more favorable, what the Federal Reserve wants to see. Not what people want to see, because it means that there is more unemployment right now, but for this reason it creates a very good conditions for the Federal Reserve to finally start cutting the interest rates, which theoretically is supposed to boost the stock market in general. And specifically, some analysts, such as for example from the Bank of America, they do consider that right now is one of the best times to invest in the stock market, at least in the current cycle. And they highlight 4 different scenarios which we can go through potentially, with definitely seeing one which we are going through right now. The scenario number 1 is when the earnings of companies, they do go up whenever the economy growth does slow down, and it only happened several times since 1950s, and inevitably in 79% of the cases this did bring 3.6% quarterly growth. The scenario number 2 is exactly the opposite, whenever the earnings of companies are declining but the economy is going up, and approximately in 63% cases the stock market was only growing 3% in the next quarter. Scenario number 3 is when both the economy and the earnings are going down, and there is a 2% quarterly growth in 62% of the cases. And the scenario number 4, surprisingly, is when both economy and the earnings reports are going up, and still the growth expected is only 2% per quarter in 69% of the cases. Bank of America analysts, they do think that most likely, with extremely high probability, we are right now in the first case scenario once again, when the earnings of companies go up and the economy is slowing down. Which theoretically, yes, in some way I can agree, the economy does slow down. We've been talking about this many times in my previous videos. And the earnings of companies are increasing. This part is very questionable because, guess what? Bank of America itself and other Wall Street analysts, they set so low expectations for companies' earnings that without a doubt it is relatively easy for these companies to beat them. They also do mention that many companies right now, they took the opportunity to reduce their leverage and borrow capital whenever the conditions were much more favorable. That is why right now they do not have that much debt interest expenses as they should have had. Because obviously right now, whenever the interest rates are high, debt maintenance becoming increasingly expensive. For this reason, the situation we are right now in is that the slowdown in the GDP growth, but not catastrophical. Yes, this is what is happening. The earnings of companies are going up and beating expectations. Yes, once again, this is also what we're experiencing right now. This tendency for the stock market to mostly grow is being seen once again in current realities, approximately since summer of 2023, and most likely it will continue until the interest rates will start decreasing, which according to these analysts is supposed to boost the stock market even higher. The question is whether the stock market will survive until that point when interest rates will finally start to be cut. Because of this, major financial institutions, they started to increase their S&P 500 predictions by the end of 2024. For example, Goldman Sachs thinks that the S&P 500 will reach 5,600 by the end of the year, and Evercore even sets the target of 6,000. And whether you agree with these projections or not, the Wall Street traditionally presented their top 10 most favorite picks, where analysts, 95% of them, they think that these are the companies you should invest and hold right now. And then they also presented the list of top 10 worst investments, what they were able to find on the stock market at this very moment. So let's briefly talk about it right now. And the list they are referring to, you can see to the left side of me, and basically top 10 companies that anywhere between 92 to 95% of these Wall Street experts recommend to buy are the following: Amazon, Delta Air Airlines, Microsoft Corporation, Zoetis, SLB, Mondelez International, Axon Enterprise, Lamp Weston Holdings, Alexandria Real Estate Equities, and Uber Technologies. And on the other hand, the Wall Street also presented the anti-rating of top 10 shares of companies which you at least should consider selling, with anywhere between 29 to 43% of Wall Street experts recommending to sell these companies. And the list goes as following: Robert Half, Franklin Resources, Paramount Global, Expeditors International, Illinois Tool Works, T. Rowe Price Group, Garmin, Consolidated Edison Steel Dynamics, and Mettler Toledo International. Please let me know, guys, if you do have any of those companies inside your portfolios and whether you're gonna listen to the Wall Street experts or not. And we're gonna end this video traditionally by showing you this week's earnings upcoming reports. So once again, feel free to pause the video to see if any of your companies are reporting. And as always, thanks so much for watching. Please like this video, subscribe to my channel if this information was helpful, informative, or both. And see you tomorrow.